Get on the ARK! Everyone on the ARK now!
I think we should get on the ARK.
I agree. I think we should get on the ARK also.
I think we should get on the ARK. I'm already on the ARK. What about you guys? So in this video, I'm going to talk about ARK, I'm going to talk about Cathie Wood's, and I'm going to talk about why I think you should invest in this ETF today. And I think it is going to be the long-term ETF of our generation, and it is going to be something to hold on to for years to come, and it is going to make us so successful. So we need to get into this right now. Okay, guys? So let's get to it. Have you heard of Cathie Wood's? Okay, look very closely. Make sure you're paying attention. Oh, that doesn't look right. Okay, much better. This lady is a genius and is one of the best investors in our entire generation. So for those of you who already invest in ARK, do me a favor and hit that thumbs up because it really helps out the channels and I really appreciate it. So the first thing I want to share is, one, ARK is an actively managed ETF, right? So what the heck does that mean? Okay guys, so typically an ETF is something where it's passive, right? So you get something like VOO or QQQ, which is not actively managed and it just follows the indexes, right? So VOO follows the S&P 500, QQQ follows the NASDAQ, and depending on how it does, the trends follow along, but not ARK. ARK is actively managed, similar, almost like a mutual fund. So if they see innovation, they're going to pounce. And if they see an issue coming up, they're going to sell out and make sure we're on top. So this is huge. So not only are we getting the benefits of a managed fund, but we're also getting in on technology and innovation that is going to be game changing. So the next thing I want to talk about, right, is expense ratio. So if you look at something like VOO, take VOO. So they have an expense ratio of 0.03, which is basically nothing. So if you put $1,000 in, they're going to charge $3 on that $1,000 per year. And say you look at QQQ, right? So QQQ has a 0.2 expense ratio. So they're going to take out a couple dollars for every $1,000 that you invest in. And it's a little bit low. So the one difference is with ARKK is that they have an expense ratio of 0.75. So it's a little bit more on the pricey side, right? So every $1,000 you pay, oh no, $7.50. Oh no, what are you gonna do? You know, it's not too bad. So for the amount of benefits that you get. So I just want to dive into Cathie Wood's and some of the thought processes that go on in, you know, what her planning is and what her investment strategy is, because I really think it's important. So let's take a look.
Very deeply into these companies and industries, and they're very focused on this quarter and next quarter. We are focused on disruptive innovation that cuts across economic sectors. Because there's so much of a siloing activity that's taken place because of how our industry has evolved, if a disruptive innovation is cutting across sectors, the odds are we are going to find it before these analysts do. We are looking for it. So we think that the inefficiencies in the business are disruptive innovation is not priced correctly because people don't understand how big the ultimate opportunities are going to be. They're not sizing the opportunity. They're not analyzing the disruption.
Cathie Wood's is reinventing the idea of what an analyst should be looking for. So the current trend used to be, hey, let's look at quarter per quarter. Let's see what's happening. Oh, is that business doing better? Okay, great. Let's increase the price target. Let's raise them up because they're going to be doing awesome. No, Cathie is seeing the bigger picture here. She is seeing the technological revolution. She is seeing what artificial intelligence and what technology is doing to the industry, and she is thinking about that and trying to price that in and saying, okay, things are going to grow exponentially. So right now it might look cheap, but in the long term, this is going to be enormous. So take companies like, let's take a look at Boeing or Intel. Those two companies are dead. They have not innovated. They've been just focusing on quarter to quarter earnings. Let's go on and let's see how we're doing. That is not the way the market is. That is not innovation.
Or innovation. So the innovation platforms that are evolving today, you can see on the right there. We are publishing a paper this week on this chart. And what we're trying to communicate here is we have never been in a period of innovation like we are now. If we were measuring this on the Richter scale in terms of impact on the global economy, this would be a 9 compared to maybe a 5 or 6 in the late 1800s, early 1900s. So you can see you have to look back that far to the late 1800s, early 1900s to see multiple innovation platforms evolving at the same time. So back then, as I mentioned, telephone, electricity, internal combustion engine. Today, we have blockchain technology, deep learning, robotics, energy storage, and artificial intelligence. These innovation platforms are going to impact every sector and are traveling around the world, as Amin and will set us up to understand very, very quickly. So they're going to transform every company and every industry.
And what ARK is doing is looking for companies that are challenging the current norm. They are looking for companies that are breaking trends and that are going to explode and are focusing on these things like technology and that are focusing on autonomy, analysis, data analytics, machine learning, all these great ideas that are going to be the front runners of the next upcoming generation. So these companies that they're looking at are going to be the next winners. So let's take a look here at how ARKK has been performing. If you look here on the list, so check this out. So ARK mainly manages 5 funds. So they've got, boom, ARK Innovation ETF. They've got Autonomous Technology and Robotics, Next Generation Internet, Genomic Revolution, and FinTech Innovations. So let's just talk about ARKK today. And if you guys want, I'm going to do some more videos and we can take a look at the other managed funds. But ARKK has a good balance of what ARK is invested in, so you can kind of get an idea of the feel for what they're into. So let's take a look. So ARK's current 1-year performance is 115%. Right off the bat, that is incredible because so active managers and funds that are in ETFs, the standard is about 10%. So if you're doing 10% or higher, you're killing it. So these guys are 99% better, 100% better. I mean, this is incredible. So if you look too at the average 5-year growth, 39% right off the bat. I mean, this is just incredible. So take a look at some of their top holdings. So what really made ARK successful was Tesla, right? So ARK saw the power that Tesla had, saw the innovation, saw what Tesla could be, and really took it to heart. And they invested a ton. So they have in ARKK 10%. So, and then you've got Roku, right? So one of the first pioneers of the streaming technology and of the smart TV. So a lot of smart TVs have Roku built into them. I mean, and then you've got companies like Square. So Square is everywhere, right? So if you go to a bar, a restaurant, or any kind of small store. I was just at the farmer's market last weekend and I bought meat. So this guy just took his cell phone out, swiped, and I had an email receipt in no time. So Square tracks all of those transactions. I mean, that is millions a day, if not more. And now they can offer advancements, benefits. They can take a look at trends like no other industry can in their lifetimes. I mean, this company is huge and is just growing. And then you've got Teladoc. We've seen what Zoom has done to our industry, and so we've seen the growth of not having to go into offices and online interactions. So I mean, they're catching on and they're saying, okay, we believe this is going to grow. Let's get into it and more. So I mean, this is just the start of the portfolio. Some of the others. So we've got PayPal, we've got DocuSign, we've got Nintendo, we've got Zoom, we've got Spotify, we've got LendingTree. Okay guys, so here's a look at a daily chart of ARKK. So right here, we've got this orange line here. So this is VOO. This is another ETF, very common, owned by Vanguard, and their major holders are like Apple, Microsoft, Amazon, Facebook, things like that. So they can see they're trending, and it's not nearly as high as ARKK, which is up here, this big guy. So then you have the QQQ, this blue line. So QQQ is mainly invested in things like Apple, Nvidia, PayPal, Intel, Cisco. So more technology based, right? So, and we've seen based on what's happened this year that technology has just expanded like crazy. So here we see a view of just the funds side by side, and again, I've included VOO and QQQ. And so right now, in a 5-year span, we've got an increase of almost 500%, and just for ARKK. And then for QQQ, it's up 176%. VOO, 81%. So all those numbers are amazing, right? So anything, again, like I was saying, over 10% is very good, is very beneficial. And say you started investing with these guys 5 years ago, your money would be up almost 500%. So come on, guys, this is incredible. So, and this here is what got Cathie so famous.
Have been coming down for 20 years. We're ready for prime time. These are 3 exponential growth trends that are converging, and that is why this is so difficult for traditional analysts to value. The base case, it's a 5-year target, so the end of 24, it's $7,000. And we've arrived at that price by weighting the probabilities of 10 different scenarios, including bankruptcy, to be honest. So we've tried to be as fair and balanced as we possibly could be. But our confidence level that this stock is heading for $7,000 over the next 5 years is very high.
Okay, so ARK has predicted that Tesla is going to hit $7,000 per share or more, and that is post-split. And so ARK has been accurate. I mean, Tesla's going to be included in the S&P 500 in about a week or so, and there is just a lot on the horizon for them. So I am very excited about ARK, and I am very excited about Tesla. And if you are interested in what ARK is investing in and what they're checking out, check this out. So you can scroll down here to sign up for trade notifications, and now ARK will send you an email, and in that email, you'll get to see what they're into, what they're looking at. And so if you want, you can even start shopping around yourself and buy some of the stocks that they're buying directly. Okay, guys, so that's all I have for today. I hope you found this interesting, and I hope you take some time to research ARK for yourself and check them out. So I'm going to be doing some videos in the future about Roth IRAs, IRAs, and more ETFs, so stay tuned. So thanks a lot for watching, and we'll see you around. Happy trading!